Good morning, friends. It's Sandra Bradley with the GB Costa team at Keller Williams Select Realtors. And if you've been asking yourself, is the market about to change again? Today's data gives us some real answers. So if it's okay with you, let me walk you through what today's headline are really telling us and how it affects Maryland's Eastern Shore home buyers, home sellers, and homeowners. So here in the national news, the sub 6% watch. Why is this a big deal? Mortgage rates are hovering at 6.01% this morning, and many analysts expect it to dip into the fives as early as next week. Now, this might surprise you, but buyers haven't been waiting for perfect rates. They've been waiting for confidence. 6% is a psychological line in the sand. When rates move into the fives, hesitation often turns into action. The interesting thing is the buyers who benefit the most are the ones who prepare before the headlines confirm the shift, not after competition returns. For the Eastern Shore, buyers are positioning early. Sellers should be prepared for momentum to build. And so next thing, Affordable Homes Act, bigger than it sounds. The Senate has advanced the Affordable Homes Act, which could reduce manufacturing home prices by up to $10,000 by restoring HUD oversights and rolling back costly Department of Energy rules. Now, you might be wondering, why does this matter if I'm not buying a manufactured home? Here's what you need to know. Entry-level housing sets the pressure point for the entire market. When affordability improves at the bottom, buyers don't have to stretch as far. Price pressures ease up the chain. Markets stabilize instead of overheating. And it helps. If it helps, think of it this way is releasing pressure, not lowering values. For the Eastern Shore, manufactured and modular homes play a significant role here, thereby expanding access without compromising long-term value. Institutional sellers are pulling back. Wall Street hedge funds have slowed their single-family home purchases for the third month in a row. What this really tells us is that the market is shifting back towards people who actually plan to live in the homes. Less institutional competition means fewer all-cash offers, more appraisal-friendly deals, more opportunity for FHA, VA, and conventional buyers, and what tends to happen next is a healthier, more stable communities. The grandparent migration. A new national study shows that being close to grandchildren has officially taken over climate as the #1 reason people are downsizing in 2026. And this matters because this kind of demand is financial stability, long-term focused, lifestyle driven, and if you think about it, that aligns perfectly with many Eastern Shore towns, the walkable, community-oriented, and close to major metros. AI-driven appraisals, equity protection. The Consumer Financial Protection Bureau has issued new guidance on AI-driven home valuations to prevent unfair undervaluation in certain neighborhoods. And this is important for sellers because algorithms don't always capture the local improvements, waterfront or historical values, lifestyle-based demand. So what this really does bring back the human context back into pricing, where local expertise matter the most. The lock-in effect is weakening. We've hit a turning point. More homeowners now have mortgage rates above 6% than below 3%. And what this means simply as the emotional barrier to selling starting to ease. Inventory won't flood the market, but it will return gradually as life decisions outweigh the anxiety. For Maryland State and Eastern Shore, this shows up locally. Now, let's connect with all what's happening right here on Maryland and on the Eastern Shore, because this is where today's headlines turn into real-world impact. First-time buyer support is expanding. Maryland has replenished funding for programs like SmartBuy 3.0, which helps first-time home buyers pay off student loan debt as a part of their home purchase. And what this really means is that more buyers can qualify without stretching themselves thin. Because the barrier isn't income, it's often debt structure. This opens the door for teachers, healthcare workers, and young professionals who want to stay in Maryland and build long-term roots. New disclosure rules equals better decisions. New water and flood disclosure rules are now in effect, requiring sellers to share basement seepage and drainage history and not just flood insurance claim. This is important because it creates clear expectations before inspection, reduces renegotiation surprises, and supports realistic pricing. Transparency does slow market, it strengthens them. Infrastructure and revitalization. Dollars are flowing. Millions of dollars are being invested across Maryland's Eastern Shore communities into water systems, housing rehabilitation, downtown revitalization, and walkability. And this is important because infrastructure investment is one of the strongest long-term supporters of property values, because buyers are buying with confidence, not just homes. When communities invest, demand follows. And what does this mean here on the shore? When you put all this together, what we're seeing locally in the market is that becoming more functional, more informed, and more sustainable. And that's good for homeowners, protecting value. It's good for buyers, making thoughtful decisions. And it's good for sellers who want predictable, confident demand. So here's the bottom line for January 16th. This isn't a market for guessing. It's about a market for understanding details. Rates are hovering at a turning point. Affordability tools are expanding. Transparency is improving, and communities are being invested in. It makes sense. The next step is simple, a conversation, so you can decide what is right for you with real information, not the headlines. I'm Sandra Bradley with the GB Costa team at Keller Williams Select Realtors, and I'm here to help you make a confident, informed decisions.